Hey guys, this is Zach here. So this video is continuation of analysis that I was doing, that I posted in my previous video. Sorry, I had to cut it short. Um, so I was talking about this move, this correction WXY. What happens is at the end of Y, we either enter short or a long based on the type of impulse. This is an uptrend. The move is to the upside. So after you think the correction is over, you basically uh, enter a trade in the direction of the trend. So how do we know whether this move is over? So Elliott wave, I mean, if you're a beginner, you know there are lots of rules to remember, and it takes years to master because there are a lot of nuances, smaller details that you only get to know over time. But what's simple about it is basically you don't have to worry about other things like liquidity or supply and demand. You don't look at that. You draw trend lines. That's how I use Elliott waves. So waves. So we have to identify a wave and we draw a trend line along the waves. So this is the Y wave, and this was a parallel channel, and it doesn't have to be perfect. Like the bottom part of the parallel channel doesn't have to tap all the wicks. It's just like generally it's like in parallel channel. So now you have to wait for breakout of the parallel channel. So that's what I saw here, breaking out here. These are like 5-wave impulse on an hourly time frame. 2, 3, 4, 5. And then this is a correction. I mean, people can debate that this went too deep, but this is Bitcoin we are talking about. Volatility is very high. So we can just go by the rules. There are like we have to, this particular dump would have not been this severe if there was no news. This dump happened because of that news about Iran, Israel attacking Iran, something like that. So now from here again, we started moving up. This is a new wave now. We're starting up. This is wave 1. And then I would have entered. I have not entered the long over here, but if I was using Elliott wave, I would have entered long here, somewhere around here, to take it to new highs. Okay, because we are expecting this correction to be over. Okay, but there is a catch. Okay, now let's go to the catch part. If you use only one technique of analysis, like if you use Elliott wave, or if you use Wyckoff, or if you use ICT, whatever, if you use only one technique, it's an incomplete analysis because things like this. So if you see here, this is a WXY correction. Here also we saw WXY correction. So you see this part over here. This entire part could be this part. We go up again here. Either we go up, we just SFP the high. I'll tell you why SFPing the high is a real possibility later. But if you go up here, SFP the high, and then come back again here, this region, like we did over here. And then we do this part again, like that for a while, and then go up. It's a real possibility. Now, if we just use Elliott wave at this point, it would be very hard to tell that whether we are going to get this part. But if you move to harmonics, so Bob has posted posted couple of harmonics that has a PR somewhere around 71K. So I think it's a cipher. So if you go and hit that cipher, it's possible that we can come back now in another corrective fashion and then go up. And then there is this resistance as well that I have posted on my page. This 618. Okay. And this particular level also matches up with a very significant level at the POC of whole range. So if you know anything about volume profile analysis, you know the POC is the hardest level to break up. If it is broken up, we know we're going to continue up, at least till VAH. So there are several things over here, like the 0.618 is over here, then the POC is over here. So I expect rejection. Okay. So there are a lot of things still that can bring Bitcoin down in coming days. So it's not completely out of woods. It will be completely out of woods, at least to go to this particular level when we start closing above 68K this particular week. 68, 100 or something. If we start closing above this on daily time frame, I think we are good to go higher. From here, I mean, we can reject from VA edge and come back down a little bit. Then we can move back up again from there. And I think in that scenario, let's say if we come back down even more, somewhere around here, this particular wick would be the bottom. I mean, we can come back down to 786 or 886 level and then go back up again. But this wick would be the bottom. Okay, so this is how I'm looking at this in terms of Elliott wave analysis. Now let's change gear and look at it in terms of Wyckoff, a little bit of Wyckoff analysis. I mean, that's what I use mostly for my trading. So if you look at this lower range over here, let me probably here it is much more clear. So if you look at this lower range, it's not really clear, but this is Wyckoff model 1 accumulation. So what happens in model 1 accumulation is we have initial tap, which we call ST. Then we have another tap, which we call STB. And then we have the third tap, which we call the spring. And then we actually got that. You can draw a trend line over here. This is model 1 accumulation. When people, when they look at Wyckoff analysis, they start drawing, they start drawing all the phases, like from here, ST1, we have to go here, and then they start matching the tops as well. I mean, it's good if we get exact match as what we have in the Wyckoff book. But what I look for is this, the bottom 3 wicks. In case of accumulation and in case of distribution, I look at top 3 wicks. So why did we actually bounce from here? I mean, what is over here? I mean, we don't see in a demand zone. It's not visible. Usually when somebody looks at a demand zone, they want some candles like this over here. This looks like a demand zone. This looks like demand zone, okay? But there is nothing over here. Why are we bouncing from this wick? So what is a demand zone? We have to understand that first. A demand zone is a place where large institutions or whales or market makers have entered place their orders. So for entered means for a demand, for a zone to be demand zone, large whales and institutions should be buying over there. And from where do they buy? They buy it from the retail investors. So sometimes these orders take time to fill. So we get demand zones like this, which are formed in an interval like an hour or 4 hours. Sometimes they are filled instantaneously, like in microseconds. What would have happened is, like, as soon as certain level like this was breached, a lot of people would have gone short over here, retail investors. Immediately, millions of orders would have come in, and it would have filled this particular wick, or fill the orders of the whales and institution instantaneously. So that's why we got this wick over here. Now, if you want to see what's inside this wick, we have to zoom to the lower time interval. So right now we are on the hourly. Let's zoom to even lower time intervals, and we should see, if we go to, let's say we go to the 3-minute time frame. I don't see anything, right? Let's go even lower. I think, let's see, go to the 30 seconds. Don't see anything yet. Let's go to 10 seconds. No. 5 seconds. 1 second. I think Bing actually doesn't have that kind of, let's see, on a different chart. Okay. First, let me count on hourly. Yes. So I have actually marked here for you guys. I did this investigation earlier. So I found an order block over here, right here. So let's go there. Let's go here. Okay, let's drop to 5 seconds. You see, this is an order block. So it took just 5 seconds to fill all the orders. And if you go to let me just remove this. Okay, let me extend this. It's 2 different color. We know. You see, this wick, it actually tapped into this demand. This is a very solid indication that at least a short-term bottom is in, if not the long-term bottom. At least a short-term bottom is in, guys. I did not investigate this earlier, otherwise I would have posted, but 2 days ago I was looking at this and I found this demand zone over here. So this demand has been tapped, and we have broken up. We have broken market structure. Okay. So now what? So are we ready to break up yet? Let's analyze that as well. So what happens here is we have to look at the top of the range now. Is the top of the range a complete distribution? So what I mean by complete distribution is, just like here, we saw this is a complete accumulation. This accumulation is a perfect Wyckoff model 1 accumulation. For a distribution to be valid and for the top to be defended, we need the distribution should be perfect, but it's not. You see, this is neither a model 1 or model 2 distribution. If it was a model 1 distribution, what we would have seen is this, after this high, we should have seen another high and followed by another one. Then if we would have come down here, I think that particular, the top range would have been top for a very long time. Like we would have come down here, then come back up, and then rejected from that particular range again. And then if we were still bullish at that time, we would have broken it up. But this is an incomplete distribution. So it's very possible that we can go up this time. Take this out in an SFP style move, come back down, then one more move up. And that will be the completion of this distribution. Okay. So that's what I'm looking at in terms of, so from Wyckoff analysis perspective.